Joining me now is Dewardrick McNeil. He's senior policy analyst at Longview and a CNBC contributor. Dewardrick, welcome. So when are we going to have the kind of clarity that would make you comfortable with buying some of these declines?
Hi, Kelly. Thanks for having me. Look, I think we are getting a lot more of a picture of what has upset or at least concerned the central government, the CCP, and we're getting a sense of what regulators are being asked to crack down on. However, there's been a lot of talk about Xi Jinping's concern about what he considers to be unregulated or out of control capitalism. And so for me, what that means is this is more than a regulatory event. Xi Jinping is likely looking to retool the Chinese economy completely. And while the fundamentals of these companies may look good now, we're not sure that these business models will survive what Xi Jinping has planned for the retooling of the economy. So I'm not sure that just sitting pat, trying to survive the onslaught, looking for the bottom is a good strategy, because the bottom may not exist in terms of what we think these companies will be on the other side of all of this.
And we heard Kathy Wood earlier this week say, you know, her memory would be seared for a long time about the fact that China basically just nationalized the after-school education sector. So I can totally understand why people would want to tread carefully. That said, we know the agenda. It's sort of 1950s America. It's encourage, you know, child bearing and, you know, put families first, and anything that makes the cost of living too high or interferes with those goals is subjugated to them. But to me, it would seem a platform like Alibaba or some of these others, Dewardrick, won't they ultimately become utility-like in the sense that, you know, I don't see why they would themselves would be some kind of direct threat to this goal that China has to increase its population growth. And so could investors at some point just say, listen, they've fallen, but they're not going anywhere, and that maybe the upside is capped, but so is the downside?
Yeah, I think that's a good way to think about it, Kelly. But let me toss out one other thing that's a goal that Xi Jinping has recently announced, and that is how he looks at accumulation of capital and the distribution of that capital. So they may well survive. I think Xi has a plan for them to survive. But there's also an expectation that some of this wealth is going to filter down to other people, and that the concentration of wealth among a few big companies and a few billionaires is not the model that he's looking for. So, you know, in terms of share prices, that's fine. You may regain those things, but then what will happen to that money? What will happen to the profitability? That's the question that I have as I sit here today.
No, it's a great point. I only wonder if it's not going to be these companies, can China reliably figure out how to generate the kinds of GDP or, you know, the size of financial markets that you think it would need to support all of its other goals? I guess the last question I would ask you then is, where do you think investors might look, you know, in terms of reasonably investing in Chinese companies, American companies with big Chinese operations? Or do you think that they should kind of, as many are starting to do, I mean, these ETFs that X China out are growing in popularity and assets? Is that your own best advice here?
Well, I'm reluctant to give advice because I'm not a professional investor. I'm a policy guy. And what I can tell you is there's a lot of uncertainty still left here. So yes, we're seeing regulations, but there's some real fundamental things happening in China. And me personally, I would sit pat for a while until we figure more of this out.
Wow. All right. All right. Dewardrick, thank you very, very much for joining us.